Hey guys, welcome to Stock Talk. Today, we're going to revisit a stock we already talked about, because there have been a couple of interesting updates in this ever-changing saga of a story stock. Today, we're giving you all an update on Microvision, or as it's known by its stock ticker, MVIS. Don't forget to smash that like button. In this video, we're going to talk Microvision, update you guys on what the company and its stock has been up to since we last talked about it, address some of the concerns out there, and give our perspective on things. Finally, we'll discuss what we think about MVIS as an investment and why it's a buy or a sell. We do see that most of you are not subscribed yet. Subscribe, since it helps with the YouTube algorithm. You can always unsub later. Also, make sure to favor yourself and hit that bell to get reminded when we have a new video. Now let's get into this one. To recap, Microvision MVIS on the NASDAQ is a maker of technologies that help automated vehicles operate. In general, any company even remotely related to EVs or automated vehicles is seen as a hot stock to own right now, given the Biden administration's stated goals of helping transition the country from combustion cars to electric vehicle usage as part of a push towards more responsible climate policy. Microvision doesn't make cars itself, but it does make the technology that goes into automated vehicles, and longtime viewers of the channel will know that the global semiconductor shortage, brought on by the COVID-19 pandemic, has made companies that provide tech to automated vehicle manufacturers increase rapidly in value as semiconductors become more scarce, meaning EV and automated vehicle manufacturers are willing to pay more. Not only that, but Microvision recently announced that it's developing a technology related to light detection and ranging, LIDAR, or LiDAR, which promises to be revolutionary. It was when Microvision announced that it was working on the new cutting-edge LiDAR tech that investors began to take notice. Shortly after that, Microvision entered into an at-the-market offering with financial group Craig-Hallum. As you recall from our last video, at-the-market or ATM offerings can be great as they allow the broker selling the shares to do so at different stages to capitalize on swings in the stock price. But it's also riskier because if share price begins to drop, it makes an ATM offering useless, as now selling further shares would require doing so at a loss, and that makes the company performing the ATM offering miss out on potentially much-needed capital. And that's exactly what happened to Microvision. Right after they entered into their ATM offering with Craig-Hallum, their share price dropped a little, brought on by the Texas freeze, and this turned their ATM offering useless, pushing their share price down even further. By the time 3 weeks had passed, MVIS shares were down over 50%. It was during this drop that we predicted MVIS was actually becoming more and more valuable, because we predicted, as soon as the Texas freeze was over and shares began to rise in value again, the ATM offering would become profitable and get Microvision the capital it needed to resume and expand operations. And boy, were we right. Since March 8th, MVIS has risen 48%. Now, that doesn't quite bring it back to the level it was before it crashed, but it means several things. One, the ATM offering will soon become useful again, and its price will rise even further, and two, it's an indicator that the worst ramifications of the Texas freeze might be behind us. However, that's not how a lot of investors are seeing this. First of all, Microvision recently stated that they don't really have a clear timeline on their LiDAR tech. This scared some investors who saw the LiDAR tech as the end-all be-all of why MVIS was valuable. Secondly, reports began coming out saying that Microvision might be a bubble, all because of its rapid rise. In our opinion, these ideas fail to account for the full reality of what makes Microvision such a great firm and so valuable. That the market they're operating in is booming more and more every day, and that they have this incredible ATM offering that will soon become profitable and then will help bring much needed capital to the company. Now, that's not to say that everything is peachy for this avant-garde tech company. Microvision just released a Q4 2020 earnings report that stated that the company lost $3.6 million in its fourth quarter. Per share outstanding, that equates to roughly 2 cents a share. However, this actually makes up part of a tightening of losses for 2020 when compared to other years. In other words, Microvision has lost far less money in 2020 than it did in 2019. Obviously, it's not great to lose any money at all, but you have to remember that virtually no company did well in 2020. While the chip shortage helped several companies that supply EV and automated vehicle companies, the pandemic that caused it still also reduced greatly the number of cars on the road and the money people had to buy new cars. Now that we can see the light at the end of this pandemic tunnel with the vaccines, I expect that the vehicle industry as a whole, including Microvision, will fare much better. Also, Biden recently announced a $2 trillion push for greener tech, including companies like Microvision. In fact, Microvision has been pointed out by investors as a company that could benefit particularly well from this infusion of cash, as they supply crucial tech to car makers who will now perform way better once these incentives kick in. And remember, all it takes is for MVIS to do better than it was in February for that 50 million ATM offering to bring Microvision the funds it needs to continue research into LiDAR technology and continue to be at the cutting edge of automated vehicle technology. So where does that leave MVIS? Well, I think it's a hold. We were right in our last video to talk about MVIS when we said that the crash would end, and once it did, Microvision had enough tools in place that it would quickly become an investor's favorite again. And we were right. Now, I believe that as soon as MVIS breaks through its February levels, which it's on trajectory to do, investors will see the capitalization flood in and fund continued R&D on Microvision's cutting-edge tech, and their renewed interest in the stock will push its value even higher than before. It's not entirely etched in stone when that will happen, nor how strong the effect will be. However, so holding on to your MVIS till $20 is definitely a good short-term play. It may go higher, but I'm here for the short-term play. So guys, that was a brief overview of where MVIS currently stands in the market. While MVIS has absolutely had a much rockier road recently than many stocks, I think the worst of it is over, and the numbers show that investors are beginning to agree. But what do you guys think? Is MVIS a bull or a bear? Let me know what you think in the comments down below. If you like what you saw, remember to smash that like button and subscribe and turn on notifications so you don't miss more videos. And I'll see you guys in the next one.